Tariff is a word that I'm sure everyone has heard a lot about lately. While people might be tired of hearing about them today, we're going to dig into them a little bit more, not from a political or policy angle, but from the practical impact they've already been having inside your company, especially on customer service, accounts payable, and accounts receivable teams. I'm Scott Leahy, and this is Esker On Air. Joining me today is Shelly-Ann Campbell, Source to Pay Strategic Solution Manager at Esker, to help us navigate how tariffs might be impacting your financial departments. Shelly-Ann, welcome to the podcast.
Thank you for having me.
I know for some of you, if you're watching the news like I am, it's been explained a million times over by now, but could you please just explain to us what a tariff is and maybe more importantly, why they can cause challenges for our financial teams?
Sure. So yeah, definitely tariffs have been said a lot. So basically, a tariff is a tax on imported goods for which a company is receiving and has to pay, right? So obviously the cost of these goods essentially rises very suddenly, almost unexpectedly. So like while procurement and supply chain teams clearly get hit by tariffs, it will definitely ripple through in pricing and through customer expectations and impact financial workflows.
So we're going to look at how these tariffs can potentially affect customer service, accounts payable, and your receivables teams. And we'll say first up is customer service. So what kinds of challenges can your CSRs face?
Right. So up front, just given the challenges and the nature of their job, right? As the company's front line for questions for customers, they're already getting a lot of phone calls and emails. So now imagine getting a spike in both of those on top of what they already have to deal with. That is very, very likely to happen. But I think the tricky part with the tariff situation are price changes, delays, and overall confusion, right? These are happening constantly. So your customer service team may not have answers real time for these questions. They can potentially get stuck waiting for information from other departments. And just to get that information in order to respond to these questions, this will likely cause additional frustrations.
And that really, as you say, it really puts customer service in a tight spot. So, um, yeah, they're having to be more reactive and instead of staying ahead of those customer needs, right?
Exactly. And as these shipments get delayed and rerouted because of customs or cost saving strategies, setting accurate delivery expectations will become nearly impossible.
And I guess on the other side of the house now, on the accounts payable side, what can those teams expect to be up against?
I think the first big one, right, would be price mismatches. I think invoices are going to start arriving with these extra tariff related fees, unexpected adjustments, and new compliance costs. That all of those will make the standard matching processes harder, and it's going to slow down the workflow approval process and cause overall delays internally. I think along with that, there's also the pressure that these teams are going to be getting from leadership, right? Like in times of uncertainty, there's usually a priority to tighten up spending. And since these added costs will eat at margins, the accounts payable team is going to be asked to process things faster. But guess what? They're going to have much less clarity.
Thinking about vendors as well, I imagine sourcing new vendors is going to be one of those challenges, likely one of the solutions in certain cases too.
Absolutely. The vendor relationships are definitely going to get more complex, right? Suppliers are going to want to change terms. They're going to probably have to pass along these costs. They're going to ask for faster payments. And I think along with that, many companies are going to be looking for new vendors. So the onboarding process and the onboarding costs are going to be impacted. And they're also going to look to start to renegotiate those contracts. And that's going to add more work to the team.
And then finally, thinking about the third team on our agenda today, accounts receivable. What should that receivables team be preparing for here?
So similarly to accounts payable, right? The receivables team will be facing, some of the same issues, just on the other side of the equation. So instead of seeing new fees and charges because of tariffs, the AR team will face delayed payments, more invoice disputes coming from their customers, definitely a surge in questions and around these unexpected charges and price changes that they're seeing on their invoices. When customers see increased charges, some of them will hold off on paying and or start to challenge the bill. Likely you'll also see those same customers ask to extend their payment terms, right? And you'll definitely see an increase in a lot of those requests, and that will expose the company to bigger credit risk. The AR team is going to have to spend a lot more time chasing payments and flagging at-risk accounts. So similarly to AP, leadership within companies will be asking for better reporting, more real-time cash forecasts. They want to get feedback on trends, understand what the collection status is across the company, to understand cash flow. And this means that the teams are going to be stretched with more things to do, but with less time to do it, and definitely a lot less visibility.
I'm noticing a theme here. Customer service, they're going to be dealing with a lot of upset customers. AP, they're going to be handling probably a mess of mismatches, and accounts receivable, they're going to be trying to chase those dollars that might not show up on time, certainly not on a schedule that they're used to. So for all of these teams and any company who might be listening, in a general sense, what's the game plan?
So I think first, the companies will need to recognize that these incidents aren't isolated, right? Tariffs are going to create ripple effects across the departments within a company. So you'll need more visibility for sure, better communication, and absolutely better coordination. I think most importantly, you'll need to pinpoint which of your workflows still rely on manual steps, right? Or disconnected tools and processes, because those are going to be the first areas that are going to be impacted, and those will be the first areas that need to be addressed. Automation for sure will give each team better visibility, right? Faster access, better data, and just the ability to adjust quickly. And I think quickly adjusting to the changes is going to be the key here. So whether it's syncing pricing updates, surfacing credit risk, or giving customer service real-time shipping and invoice details, automation will help companies stay informed so that they can at least answer questions, right? Have up-to-date information and help make strategic decisions and stay calm in the chaos.
And I think maybe one way to think about this could all be the difference between reacting and what that word means, and more so responding.
Exactly. I mean, there's nothing we can do about the tariffs, right? That's just not our area. However, you will need to keep your teams from drowning in added work. And the reality is, like, automation is a key to help with that.
Yeah, well, all this is great. Shelly-Ann, really appreciate you coming on the podcast here today. Normally we're going to have a schedule over time of topics that we want to discuss, but sometimes there's going to be a topic that we need to talk about now. And tariffs is definitely one of those things in an uncertain time that can affect your finance departments greatly. So appreciate having you on the podcast.
Thanks for having me.
So if you're curious about how Esker Solutions can help build process resilience for your finance teams, check out the links in the show notes below. And as always, to learn more about Esker, visit us at esker.com. Thanks for tuning in. We'll catch you next time.